Have you ever noticed how a few headlines about tariffs or market crashes can send waves of anxiety through not just investors, but everyone from small business owners to working-class families? The connection between global financial markets and the average citizen might seem distant, almost abstract. But the truth is, when the stock market stumbles, it often brings the economy, and with it, real people, crashing down too. In this video, we'll unpack how stock market losses, especially those triggered by policy decisions like tariffs, ripple through the economy and affect ordinary people. We'll dive into the nature of the stock market, the impact of Trump-era tariffs, and how it all trickles down into your wallet, your job, your savings, and your future. Thanks for joining Nexus-Feed for another insightful episode. Let's dive in. What exactly is the stock market? Starting with the basics. The stock market is essentially a global system where shares of publicly traded companies are bought and sold. These shares represent ownership in a business. When you buy stock, you're buying a piece of that company, and companies list their shares on exchanges like the New York Stock Exchange or the Nasdaq to raise money from investors. In return, investors hope the company grows and their shares increase in value. But here's what's important. This system isn't just a casino for the wealthy, it's deeply tied into the broader economy. Most of today's trading happens electronically, with algorithms processing millions of transactions per second. But even with all this tech, the fundamentals haven't changed. Stock prices are still determined by the basic forces of supply and demand. If more people want to buy than sell, prices go up. If panic sets in and people rush to sell, prices fall. Why does that matter? Because those price movements, especially the dramatic ones, send signals across the entire economy. And recently, those signals have been flashing red. A quick tour of the global stock market. To understand the impact of a crash, you need to understand how interconnected the global financial system is. The New York Stock Exchange is the largest in the world, home to companies like JP Morgan, ExxonMobil, and Coca-Cola. The Nasdaq is close behind, filled with tech giants like Apple, Tesla, and Microsoft. In Europe, the London Stock Exchange hosts a diverse array of international firms. In Asia, Japan's Tokyo Stock Exchange is a major player, tracking industrial and tech-heavy corporations. When one of these markets crashes, it often drags the others down with it. In today's globalized world, a shock in one market is rarely contained. Tariffs. What are they and why do they matter? Now let's talk tariffs. A tariff is a tax imposed on imported goods. Governments often use them to protect domestic industries by making foreign products more expensive. But there's a downside. Tariffs often lead to retaliation. Other countries slap taxes on our goods in return, and suddenly you've got a trade war. That's exactly what happened under the Trump administration. Starting in 2018 and re-emerging in 2025, the US implemented sweeping tariffs on countries like China, aiming to bring manufacturing back to American soil and reduce trade deficits. Supporters argued this would revive American industry, but financial markets weren't buying it. Market reaction to Trump's 2025 tariffs. Let's zoom in on recent history. The S&P 500, one of the most widely watched indices representing the biggest US companies, hit a peak in February 2025. So did the Nasdaq Composite, the FTSE 100 in the UK, and Japan's Nikkei 225. But then came the announcement tariffs on a wide range of goods, reigniting trade tensions. The market's reaction? Panic. The S&P 500 dropped over 10% in just 2 days and nearly 20% within a few weeks. The Nasdaq entered bear market territory, a 20% drop from its high. The FTSE 100 lost over 13%. The Nikkei 225 plunged more than 20%, suffering its worst single-day loss since the COVID crash of 2020. Trillions of dollars in value vanished almost overnight. But here's the key question. Why should anyone who doesn't own a single share of stock care? How market losses hit the everyday citizen. First, retirement. Most Americans have their retirement savings tied up in the stock market through 401ks, IRAs, and pension funds. When markets fall, those accounts shrink. That might mean postponing retirement, tightening budgets, or rethinking long-term plans. Next, jobs. When stock prices fall dramatically, companies often panic. They freeze hiring, cut costs, cancel expansion plans, and in many cases lay people off. Companies facing higher costs due to tariffs may also pass those costs to consumers or slash their workforce to stay afloat. This hits workers directly. You don't need to own a single share to feel the consequences. And then there's inflation. Tariffs make imported goods more expensive. That cost usually gets passed down to the consumer. So electronics, groceries, clothing all get pricier. It's essentially a hidden tax on consumers, disproportionately hurting lower-income families who spend a larger share of their income on essentials. Add to that declining consumer confidence. When people see the stock market tumble, they get nervous. They spend less, which reduces demand. Businesses feel the pinch. Layoffs increase. It's a vicious cycle. Specific sectors get hit hard. Certain industries are especially vulnerable. Agriculture, for example. When the US imposes tariffs, other countries retaliate. One of the first targets, American farmers. Suddenly, soybean exports to China plummet. Dairy exports to Europe dry up, and farmers already operating on thin margins suffer huge losses. Manufacturing takes a hit too. While tariffs are meant to protect American manufacturers, many of them rely on imported parts and materials. Tariffs raise their costs, making it harder to compete globally and sometimes even at home. What the experts are saying: economists and financial analysts have been sounding the alarm. Goldman Sachs and JP Morgan have increased their estimates of a near-term recession. The Federal Reserve has warned that tariffs could accelerate inflation, and many point to the possibility of stagflation, a toxic mix of slow growth and rising prices. Some experts compare the current tariff environment to the protectionist policies of the 1930s, which deepened the Great Depression. The fear isn't just about tariffs themselves, but about how they fracture global supply chains and create long-term uncertainty. Even Jerome Powell, the Fed chair, acknowledged that tariffs could derail the economic recovery and force difficult policy choices. Can tariffs ever be good? It's important to acknowledge the counter-argument. Proponents of tariffs argue that the US has been on the losing end of trade deals for too long. They say tariffs are a tool to correct unfair practices and rebuild domestic industries hollowed out by globalization. In theory, tariffs could create jobs in protected sectors, but in practice, the costs often outweigh the benefits, especially when other countries retaliate. Most economists agree, while some short-term gains may be possible, the long-term consequences of broad, poorly targeted tariffs are usually negative. The human cost of economic policy. You know, it's easy to talk about all of this in abstract terms, percentages, market caps, inflation rates, but behind every data point is a real person. A retiree watching their savings dwindle, a factory worker laid off because the supply chain broke down, a farmer watching crops rot without a market to sell to, an office worker seeing prices rise while their wages stay flat. These are not side effects, they are the real cost of policy decisions. When governments play hardball with trade, it's often ordinary people who get squeezed in the middle. What happens next? The future is far from certain. If the tariffs stay in place, economists warn that we could see continued market volatility, rising inflation, and potentially a prolonged economic slowdown. Some analysts suggest there's now a greater than 50% chance of a recession within the next year. Consumer prices could keep rising, job growth could stall, retirement portfolios may struggle to recover, and sectors like agriculture and manufacturing could face long-term contraction. At the same time, the global economy remains incredibly interconnected. What happens in Beijing or Brussels can quickly affect Wall Street and your street. So what can you do? It's easy to feel powerless in the face of global economic forces, but there are steps you can take. First, if you're investing for retirement, don't panic. Financial advisors consistently recommend sticking to a diversified portfolio and riding out the volatility. Trying to time the market almost always ends badly. Second, pay attention to policy. Tariffs and trade deals might seem like distant issues, but they can affect your job, your income, and your grocery bill. Stay informed, vote accordingly. Third, support local economies when you can. Buying locally made products helps reduce reliance on fragile global supply chains and supports your community. And finally, demand accountability from policymakers. Economic policy isn't just about charts and numbers, it's about people, families, workers, savers, and dreamers. In a global economy, no one is truly insulated from market shocks. When the stock market crashes because of tariffs or trade wars, it doesn't just rattle Wall Street, it sends shockwaves through Main Street too. From higher prices at the store to lost jobs, from shrinking retirement accounts to eroding consumer confidence, the ripple effects are far-reaching and real. That's why it matters. That's why we need to understand it, not just as spectators, but as participants in an economy that we all help shape. So the next time you see a headline about a market drop or a new round of tariffs, don't just shrug it off. Know that the consequences could hit closer to home than you think, and maybe, just maybe, we can start demanding smarter policies that don't leave everyday people caught in the crossfire. Thanks for watching Nexus-Feed. If you found this breakdown helpful, consider subscribing for more deep dives into the economic forces shaping our world.